more. Unlock smarter, more sustainable growth with the What Generates Profit Clarifier. It is my pleasure to be here with you today. I am your host, Coco Selman, 5-time founder, impact investor, and creator of the Force for Good business system. And I am honored to share with you today a masterclass on the topic of profit. And as I was preparing this morning for this conversation with you on profit, it brought me back to when I was merging Illume with Allpoint. We had gone through the long journey of signing a deal, and now we were merging our two companies. And I knew in my heart it was the best thing for everyone, but it didn't feel like it at the time. It was hard for me. It was hard for my team. It was hard for my partners. It was hard for patients and families. The whole thing was scary and uncertain, but I knew in my bones it was the right thing to do. In order to settle myself at the time, and it really took a year to even sort of get up in the morning and feel good. It was really hard in those months, even though in many ways it was successful. In all the ways of profit, it was successful, but it was really hard on people. And so it made me remember and think about the time I was writing my book, A Force for Good. And I was listening to the book this morning, as I often do when I'm preparing for these calls and for these master classes. And it reminded me of why I wrote the book. It was at that time when I was merging the company, doing hard things, moving through the emotional challenges that come with sometimes doing what's best. It was the sustainable right thing for all involved. And it wasn't easy for everyone. And there were sacrifices that I had to make personally and that others had to make personally that were hard. And so as I was listening to the book this morning, I thought I would share with you a little bit from the book, because it reminds us all of why we create our companies, right? We're here to build a business of substance and scale that creates a positive impact on the world. We want to be of service to our constituents. We want to solve the challenges and problems that they face. So our company exists to be of service. So the book, A Force for Good, and the program, the system that's designed and within it, and all of these master classes are part of, are intended to help you build a company that more sustainably accelerates 3 things: impact, scale, and profit. So it's important in this conversation on profit to remember where it fits in the bigger picture. So in the book, in the introduction, it says, why grow impact? Impact is the measure of good you bring to those you serve, your customers, employees, partners, your larger community, the industry as a whole, and the wider world. It is the measurable progress of a company's purpose. That's impact. So why grow scale? Bigger isn't necessarily better. Scale within our Force for Good context is grounded in purpose. Within these parameters, scale is important for 2 reasons. First, and most important, scale is the manifestation of your vision. It is the realization of what you hope to deliver to the world en masse. It's your purpose fully executed. Second, though, practically speaking, you will need a certain level of scale to create the funding or gross profit, which we're going to talk about today, necessary to support your purpose. Without an adequate number of customers or units sold, you will not be able to keep the lights on, let alone hire the brilliant team, implement state-of-the-art technology, or build the most elegant solutions for customers. Scale is needed for impact. It is also needed for profit. So why grow profit? Profit is the life force of your company. It allows you to create prosperity for your team, your shareholders, and yourself. Profit also broadens horizons, leads to new levels of breakthrough, and drives more good into the world. Profit is meant to be a force for good. So today we are talking about profit and its place. And so profit is so important as we enter this conversation today. We're going to be looking at profit and we're going to be thinking about it from a very data-driven perspective. But as we do, I invite you to see that profit is connected to your purpose. It is a measure of your purpose. It is the life force of your ability to manifest the purpose of your business, whatever that purpose happens to be. Make the world better through women-led business, to provide remarkable care, whatever it is, right? Disney, to make people happy. So whatever your purpose is, profit is the way to do that. And so as we look through this in a somewhat mechanical way and somewhat very data-driven way, just keep in mind these parts of what we're talking about. All right, so I'm going to invite you to see profit and some of the challenges you might be having. So are you selling lots of things? Different products, different service, but unsure which ones are truly fueling your growth? Do you sometimes feel like you're working harder, but not seeing a rise in profitability? Got more customers, maybe you're starting to sell more widgets, but you are still not bringing home as much to your bank account. Are you guessing which products deserve more attention and which should be let go? Do you, at the same time, long to build a business that grows both revenue and value and without draining your energy? So sometimes we think more profit, more scale, more impact, just it means harder on you. And it doesn't have to be that way. And by using these tools and concepts, the goal is that you will start to work differently with your team. And so one day, 1 week, 1 month, 1 quarter, 1 year at a time, you start to spin the flywheel, not by yourself, but with your team. And so today we're going to focus on what generates profit and start to have these conversations with your team. So what generates profit refers to the specific products and services that are driving both strong customer value and healthy profitability for your business. So this journey today includes a clear-eyed analysis of what's selling most consistently, what's generating the highest profit margins per unit, and what's contributing the most total profit overall to your company. So we're going to break all these specific things down for you, and knowing what generates profit helps you focus on the intersection of customer demand and financial return. So you can double down on what's truly working to fuel sustainable growth. And so what I'm talking about here, this is where you are really listening deeper to your customers. You're hearing specifically where it is they are showing up and say, yes, I want to buy this. This is important enough to me that I will invest my time, my money, my resources into this. This is truly important to me. It's how you measure whether something is truly of value to your customer because they'll pay for it. So then you're also going to say, well, and how is this really working out? Is there a financial return? And where is there financial return? And you'll start to see this as you do the analysis and use the tool for today. So let's understand profit a little bit before we dive into what it is that's going to create profit. So here we're going to look at an income statement. And I'm going to make this bigger on the screen for you so you can see it. So understanding profit. So at the top, you see revenues, right? So this is an income statement. And overall, what it's doing, it's showing you for a period of time, how much revenue, gross profit, expenses, net income before taxes, and the net income there is. It's showing you for a particular year, for example, or a particular month, how much revenue, how much gross profit, how much expenses, and then what's your income. So where we want to, so this is revenues is a reflection of the impact and scale, right? It's saying here's how much we were able to sell. So revenue is your price and how much people actually paid for it. Now, the next piece here is the cost of goods sold. And this is everything that it costs to make or produce whatever you're selling. So if you're selling widgets, it's the cost of actually building the widgets. It's not the cost of the building that the widgets are made in. It's not the people that are running finance. It's none of that. It's just the cost of what it takes to build the widget. Now, if you're in a service business, then it's the cost of the people that are doing whatever the service is. So in my healthcare company, it was the cost of the nurses. How much per hour did we pay them versus how much per hour were we being paid? What was our price? So here's where you are looking at your revenue, your cost of goods sold, and then your gross profit. This is really fundamentally what we're talking about today. What's creating the most gross profit? And so gross profit is when you take the revenue minus the cost of goods sold, and that becomes your gross profit. The gross profit is what fuels, if you have, in this case, on this particular example, you have $350,000 of gross profit, and you have your expenses of $258,000. This is for all the expenses in your company that aren't related to selling or building your company, your product itself. And then you have your net income of $91,000. So you want to make sure that your gross profit is always, whenever it can be, above whatever your expenses are, because that's when you break even. You also want to see where can you create more gross profit by meeting the needs of your customers in the most profound ways and not spending money on things that you don't need to spend money on up in cost of goods sold. So it's a way of becoming more and more refined to creating value that is actually needed by those you serve, and not having extraneous costs that don't help, right? That aren't building value. So we're looking at which products, which solutions you're selling are meeting that need. We're looking for what drives the most gross profit, because then later on, we'll talk about expenses and how you can manage those. But today we're saying what's going to drive the most gross profit, because the higher my gross profit is, the more choices I have on how I run my company, whether I invest more in my people or my product, or whether I pay myself or I pay my shareholders. So understanding profit is really key, and understanding its connection to how you serve and why it helps you create impact and scale and value. So here, what generates profit, we're going to look at a specific example. This is a fictitious software as a service company. And you can see that we are looking at, this is a lot of numbers, but let me walk you through. So we're looking at the products that this company serves. And this company sells a starter plan, a pro plan, and an enterprise plan. So you can see the starter plan costs $49. The pro plan is $199, and the enterprise is $799. And then we ask ourselves, what does it cost for me to build the starter plan and to execute it? Oh, it costs $5. That means $49 minus $5 is $44 in gross margin. So I can see right there that I'm getting 90% gross margin on every product, every starter plan I sell. Now you'll notice here that in looking at that same data, you can see that the enterprise plan, which sells for $799 and has a cost of $150, has an 81% gross margin. So it feels like it's less valuable because it has a lower gross profit margin. But we don't really know that until we look at the next piece, which is how many are sold. All right. So then we see, wow, we have 1,200 people who are buying the starter plan, 800 the pro, and 150 creating enterprise. So that creates revenue, right? And you can see that from 1,200 starter plans, we have $60,000 or 58.8. From 800 customers creating 159,000 in revenue, and the enterprise is just 150 customers, but that's generating 119,000. So we look at the different revenue, we think, oh, well, that's pretty great. This enterprise plan, only 150 customers, and you're already getting to 120,000. So then we want to kind of jump over and say, well, how much are we actually making from that? What's the total amount of money we're making from those customers? And so let's go over to this column that says TTM gross margin. And this says for the last 12 months, right? For the last 12 months, we had revenues of 58,000, 159,000, and 119,000. And for gross margin, you can see that 52,000 in gross margin came from starter, 143 came from the pro plan, and 97,000 came from the enterprise plan. So this helps you see that while the starter plan has 90% gross profit, in reality, the enterprise plan, which has 81%, is generating twice as much gross margin to your company, right? So it helps you understand the relationship between volume, 1,200 units, for example, 1,200 customers potentially, and then like how much it's all costing. So the highest number of customers was the starter plan. The highest unit volume sales was also the starter plan. The highest profit per unit was the enterprise plan. So 649. And the highest total gross profit dollars, pro plan. So 143. So this helps you see what generates profit here. The pro plan stands out as the best balance of high sales and high profitability. The enterprise plan yields the highest per unit profit, but serves fewer customers. And the starter plan drives volume, which is valuable for upsell potential. So here's where we're understanding our products and their positioning and why we do what we do with them. Another example is a pharma company, fictitious pharma company, and we've got 3 products: Pain Relief XR, Sleep Aid Plus, and Immuno Boost. So we see that the highest number of customers comes from Pain Relief XR. So we have 18,000 customers that are buying Pain Relief XR. The highest unit volume, 20,000 units, is also Pain Relief XR. The highest, but the highest profit per unit is Immuno Boost, which happens to be 215 per unit sold. But the highest total gross profit dollars comes from Pain Relief XR. So 1.9 million is what the total gross profit is for this product. So what generates profit then? It shows us here. Pain Relief XR is the clear driver of volume and profit. ImmunoBoost, while high margin, has limited reach. So an approach might be, and this is just based on numbers here, so doubling down on Pain Relief XR while growing ImmunoBoost strategically could yield strong returns. So you see how these numbers can help you. The other thing we didn't talk about in this is it helps you see how many are repeat customers, right? So you can see in this total units sold over the last 12 months, 20,000, and the total TTM customers. So the total customers, trailing 12-month customers, was 18,000. So you can see how many customers were buying each of them. And there's some repeat customers here as well. And so that's also part of what you can look at, is that everybody's buying one in a year. There's a certain percentage buying more. It depends on your business model, right? So start to imagine now, as we think about this, start to think about your company and where it fits in this conversation. Okay, so now let's see. We're going to talk about where this fits in the bigger parameter of your business. So what generates profit is one of the legs of the Force for Good flywheel. It is one of the core growth elements. Each core growth element on its own is intended to be a place where you can, this week, this month, generate and accelerate more impact, scale, and profit. Together with the other elements, it can help you drive sustainable growth. So what generates profit clarifier is what we're going to focus on today. It's the tool that you can download at aforceforgood.biz/weekly-tool. It's free this week for our listeners. And today and the rest of this workshop, we're going to walk through the what generates profit clarifier so you can define for yourself what's generating profit and identify one habit and one action that will help you implement the gifts of today's conversation and get the growth, impact, scale, and profit that is promised by this tool. All right. Next is, let's talk about why it's important for you to do this tool and this masterclass. So a lot of founders, myself included, for a long time, avoided doing this. Okay. So why would you avoid doing this? One reason is you're just too busy working in the business. Daily operations and client demands crowd out any kind of strategic reflection time, even when profitability is on the line. So this has happened to me many times. I'm so busy focused on the business that I don't step back enough to see what's kind of obvious when you look at it. Oh, wow, some products are selling, some are not, some take a lot of time and energy, some don't. What's really working is sometimes forgotten or lost if you don't pay attention. The other big reason, and I've been totally guilty of this, I assume I already know. So founders assume they already know what's generating the most profit. Many founders trust their intuition about what is and isn't working without actually looking at data. And the more you develop the skill of looking at data, in particular with your team, the faster you go from being the only person that can run your company to having it be distributed throughout your team, and it will surprise you. Another reason is that it feels overwhelming to gather the numbers. So if you don't have a regular practice of building an income statement, like we just looked at a few minutes ago, if you're not doing that on a monthly basis, then finding those numbers is going to feel overwhelming. However, once you start doing that and you develop that important habit of looking at it, you will have mental clarity about your fiscal standing. So, and a reason we avoid it, and I am 100% familiar with this, is the fear of what the numbers might tell us, right? So once we go through the fear, we have the numbers, we can actually do smart things with it. We can do things that will work. Then you can solve the puzzle of growth. Another reason is the team is emotionally attached to low margin offerings. I've had this happen to me so many times. Oh, but I love this product or service. It has to be this way. It has to be delivered this way. It has to have all these bells and whistles. But then it becomes time to really check in and see, is it really working? Is it just that I'm attached to it? Or is somebody on the team attached to it? Another reason is a founder might never have seen profit clearly modeled, right? Most early stage companies focus on top line revenue, not bottom line results. And especially when it comes to getting ready for venture funding, a lot of times founders focus on the top. But once you start to grow, you will not be able to sustain and make your numbers and so forth if you aren't really capital efficient and focused on profit. And you will never get to the point of being able to sell your company if you're not profit focused. And you won't be able to pay yourself whatever it is you're wanting to pay. The other reason is that it surfaces hard choices. It does. This process may highlight the need to sunset certain offerings, restructure pricing, shift team priorities. It can feel disruptive. It can feel uncomfortable. So it's important here to remember that not all revenue is good revenue, right? We want to find the most profitable revenue. And I've seen this happen so many times, especially, across the board, service-based companies and product-based companies, where because their pricing is structured incorrectly, or because they're over-investing in marketing a particular product that is not actually selling, or they've designed the product in a way that is what they think is advantageous, but the customer isn't, you end up not being profitable. So why it's worth the time today and always. So you discover your most powerful levers for growth. Truly. Knowing what generates profit allows you to double down on what works, and it grows your confidence. The nice thing about profit is that it is truly reflective of where your customer is happy. And it's also where you can do it as a company in a sustainable way and keep delivering value. The second reason is you align your team around what matters. So everyone from ops to marketing can focus on the offerings that truly drive results. You also unlock smarter pricing, packaging, and promotion. You might find that your most high volume sales item is not very profitable. So you know that it's hitting some satisfaction. So then you can look and say, well, what can I do to create more profitability from this product? How can I evolve my pricing, my packaging, my logistics, my recipe? How can I make it more profitable? Profit data becomes the foundation for your more strategic decisions around the business. You will quickly identify waste and opportunity, and this will feel good. Becoming a steward of your treasures, including your cash and the revenue that comes in, will make you feel strong and powerful and successful. You can reduce investment in underperforming offerings and redirect resources toward higher margin winners. You become investor ready. Clear data on profitability strengthens your story with funders, partners, and potential acquisition partners. So you build a company that can scale and sustains, and you can prioritize what drives customer value and profit. And this is how high impact companies grow without burning out, and how you as a founder can grow without burning out. So we want to scale what works and drop what drains. So that's a big part of what we want to accomplish today. So where does this fit on the 4-page growth plan? So as you know, we return in every masterclass from the toolkit. We talk about one of the core growth elements, part of your flywheel that sits on the 4-page growth plan. Together, these things help you unlock the puzzle of growth. This topic, knowing what creates profit, sits on page 2 at the top, and it is a table that helps you list out all of your products, and then we go through and we define the price, the cost, the margin, etc. And we look at history too. So we're going to be doing that now and moving right into the What Generates Profit Clarifier, where we're going to list your solutions, analyze your solutions, and identify what generates profit. So as we go into this, know that you are going to not have all the numbers in front of you unless you push pause right now and go and gather your income statement, go and gather your metrics. Then otherwise you're going to be guessing, and that's okay. I encourage you to start with whatever information you have. The guess is better than not doing it. And the act today of mechanically going through and starting to figure this stuff out is going to free up a part of you that will be willing to go the next step. And just today's information with guesswork will empower you. Then you can go back and get the details from your systems or from your accountant or whomever, and derive the specific data. So the tool's designed to help you explore your many product and service offerings and identify which solutions are truly amplifying profit. So you're going to find out, we're going to look for 3 things. We're going to look for which products and services you're most successfully selling, so highest unit volume. And then we're going to look for which products and services have the highest profit per unit. So every time you sell this service or this product, you make the most dollars. So I'll tell you, for example, in my healthcare company, we had certain nursing visits that were the highest value, right? They weren't the complex care that was the bread and butter. That was the highest volume. And that's where we put in most of our efforts. There were others that were significantly more profitable. But that is part of knowing where you have the highest profit, and then how can you grow the parts that you have the most profit. And then the other parts, how can you lower the cost? The third thing is what products and services are generating the most profit to your company overall. And that's where we look at your total gross profit dollars that are coming from every product and seeing, okay, well, when you look at how many units we sell and how much profit is derived per unit, then we see where we're actually generating the highest profit into the company. Start to think about that. So first thing we're going to do is we're going to look at the What Generates Profit Clarifier. You'll see this table, and this is where I invite you to start to get to work. Start to list each product or service you sell. And if you have a long list of SKUs, maybe put it into product lines and then you kind of use average unit price and average unit cost. Otherwise, if you have a manageable set, say less than 10, I would say go ahead and do the exercise. If you have great data already, well, then by all means do all of them, right? Put them all into a spreadsheet and look them out and build it. We're going to go through each of the columns that's in this page. It's actually on page 3 of the What Generates Profit Clarifier. And we're going to just help you understand what they are, and then write down, you'll go out and find the actual numbers. So we're going to start with your products, listing out, and then we're going to dive in right now. First thing is the unit price. First column is the unit price. And so here on the screen, you can see that I've listed out 3 pretend products, product 1, 2, and 3. And we're going to go across the screen and looked at the unit price and go on from there. So the unit price is simply the amount you charge the customer for 1 unit of a product or service. Now I want to say this because this is important. Sometimes what our unit price isn't what we actually sell, right? So if you give stuff away and whatever, don't worry, you put the unit price here, but what we're going to do later is we're going to actually look at the revenues booked over here, TTM revenues booked. And that's going to help us find out whether or not we're actually selling at the unit price or whether we're actually selling at a lower price because we're giving stuff away or we're giving discounts. Okay. So just bear that in mind. Unit price is the amount you charge a customer for 1 unit of a product or service. So go ahead, write down the price, what you charge them. Next, you're going to say, all right, what are my cost of goods sold per unit? That's the second column. How much does it cost to produce that product? The direct cost to produce or deliver 1 unit. Fill in those numbers. And so you can see here, an example of product 1, we're selling it for $120. And it costs $25 to make it. So the COGS is $25. Next, we go on to the unit gross margin. So this is the dollar amount that you're making per unit sold, the gross margin you're making. So not the net profit, right? Because net profit takes place after all of your expenses. This is the gross profit. So here's where we have $120 is the price. $25 is the unit COGS, the cost of it. So now the unit gross margin is 95. So 120 minus 25 is equal 95. Okay. So unit price minus unit cost equals the gross margin. So that helps you see every time somebody sells this, this is how much you're making. This is how much money you're making every time, gross margin you're making. I like that number in my head all the time. That's more important to me than price, because price is really nothing. That's not actually what's fueling my company. What's fueling my company is the gross margin. Next, we're going to look at the gross margin percent. So this is I like gross margin percents because it gives us the ability to sort of quickly compare the profitability of each product, right? So we're saying the gross margin percent is the percent of revenue that remains after covering unit costs. So unit gross margin divided by unit price times 100. So in this case, we have product 1, $120. It costs $25 to make it. So we have $95 of gross margin. So what we do is we take the unit gross margin, which is 95. We divide it by the unit price, which is 120, and we multiply it by 100. And that's how we get to 79%. So we see here, right here in this column, we can see in the gross margin percent, the profitability is not 79% for product 1, 76% for product 2, and 69% for product 3. So we know that per unit, product 1 is the most profitable. So start to get a sense, what's your most profitable products on a per unit basis? All right. And in a perfect world, I would say, in a perfect world, whatever your highest product margin, gross margin product is, in the perfect world, you're selling a whole heck of a lot of that, right? All right, so next we keep going and we go to TTM units sold. Okay, so I use this term TTM a lot, and it refers to trailing 12 months. Where I got trailing 12 months, TTM, is when I was going through selling my company, and I found out that the bankers and private equity groups all talk TTM. What's my trailing 12 months? They don't want to see what last year is. They want to see what the last 12 months is. And so that gives you the closest interaction, not last year's numbers, but the last 12 months. That's what they really want to see. And that helped me realize that's really what I want to see as a business owner, as the owner of the value in the company. So we use TTM because that helps us know most accurately what's happened over the last 12 months. So over the last 12 months, we're looking at the total number of units sold. So look in your numbers as best you can, make some guesses. How many units did you sell for each product in the last 12 months? And let's say that right now you have no idea TTM, but you do know how many you sold last year. So give yourself a break. And right now, run your report and see what it says and write those numbers down. If you're not sure, guess, come up with a approximate. Just write down how many you think you sold. Did you sell 100, 500, 1,000, 2, 0? Like whatever the number is, it's okay. It's totally a neutral number. Just write it down. Trailing 12 months, the number of units sold, that's what you want to write down for each product or service. Okay, next. Next, you're going to look at TTM customers. So this is the number of unique customers who purchased at least one unit of the product or service over the past 12 months. So for example, in my healthcare company, we had for complex care hours, that was the unit we were selling, that was the product or service we were selling. We had like, a low number, like 200, 250 customers, but our hours were really big. So you might have a business that has high volume of units sold, or it might just be that like you sell one thing to that person, to every customer a year. They have a subscription or they have whatever, and it's one unit, and that's what they get for the whole year. So every business is different, but the reason we have this column is so that you can actually see how many customers are buying these products. So if we look at the data here on the page, we have 18,000 customers in the last 12 months have purchased product one. And so we also see that 20,000 units were sold. So we can see that about 2,000 customers bought more than one. That's interesting to know. You'll also see that some of the others didn't have that, right? So product two, it was 15,000 units sold and 12,000 customers who bought it. So there was some repeat sales. Whereas product three, it was 5,000 customers that bought it and 5,000 units sold. So that's just more information for you to just consider, like just know that. Moving on, we now look at trailing 12 months revenues. So how much actual revenue did you book for each product? Don't just multiply unit price times the number of units sold, because it may work out that's perfect. Usually, in every P&L I've ever looked at, income statement I've looked at, usually it's not perfect. Usually there's some discounts or this or that. So your revenue is different than what your actual unit price is. So it's important to look at the actual number of revenue, the actual revenue that was booked. And when I say revenue was booked, I also kind of mean revenue that's eventually collected. What I mean by that is if you have all kinds of, you want to have the closest representation to what you actually did, the revenue that actually represents what you brought in. And that can be complicated if you have, companies that do discounts or whatever. So without making it too complicated, put the actual revenue that you put into your income statement for each product. Hopefully that wasn't too complicated. And then we're going to look at, all right, so what's the average revenue per customer? So this is a simple calculation. We're finding out how much how much revenue did we make per customer. And there's actually error here on the screen, but it's really saying how many revenues divided by how many total customers. And that will give you a sense of how much this is correct, how much revenue per customer you generated. So $133 is what we generated from each customer, each of our 18,000 customers in buying product one. So how much revenue per customer? And then we're looking at how much COGS. So again, we're looking back to the actual amount from your income statement per product or service. This isn't just, okay, well, here's my unit COGS, $25 times 20,000. It may work out that it's close. It may work out that it's not close. So you want to actually book what your actual COGS are here as they are represented in your P&L or income statement. So this is unit cost times the total units sold. And this is, you want to pull this data directly. You want to pull it directly from your income statement. The next is your gross margin. All right. And so trailing 12 months gross margin, the total gross profit for this product or service over the past 12 months. And again, you're going to pull directly from your income statement data or your profit and loss data. Same thing. You're going to look at the trailing 12-month revenue for each product and the trailing 12-month COGS for each product. And that's going to give you your actual gross margin. So this is a really important column. This column is telling you what really is generating the most profit in your company. This column is saying we generated $2 million from product one, $1 million of gross profit from product three, and $975,000 from product two. It helps you see very clearly where the profit is coming from. And so, for example, in my healthcare company, we would see very clearly that even though complex care nursing had a lower gross profit percent per unit, it was by and large the highest producer of our gross profit overall for our company. So we want to always know where the gross profit is coming from for the total company, because that is telling us where the customer has demand, is asking for the most, and where we're actually creating the most value into our company. It may not be where we want to keep it. It may be that we see we have higher profit elsewhere, but it helps us see quickly what is right now generating the most gross profit and driving the most gross profit to cover the rest of our expenses into the company. And last, we're going to look at the total trailing 12-month gross margin. And again, this is a reflection of your actual data, not what you think it is, which is the first 4 columns: unit price, unit cost, unit gross margin, and gross margin. So you want to actually look at your data from your accounting system for each product and find out, okay, for the last 12 months, what does my gross margin look like? The overall profit margin percentage for this offering over the past 12 months is how we calculate that. So start to get those numbers together for your products, right? So when you have all of this data filled in, even if you have it loosely filled in right now, or maybe for knowing which products and services you sell the most of, this is going to start to illuminate a lot of detail and a lot of power to you. So then we go on to the next page of what generates Profit Clarifier, and we start to analyze the data. So look and see, what are your highest number of customers? Which products or services have the highest number of customers saying yes? And so write down what those are. And then the second is the highest unit volume sales. Which products or services have had the most individual units sold? Similar to the highest customer conversion, it's a measure of where you have had success moving customers to buy. So highest unit volume sales. And then highest profit per unit. Which products or services are yielding the most profit per unit sold? So write down what the answer is and just start to take this in. Just the value of this information. What insights are starting to percolate? And next is, what's the highest total gross profit dollar? So which products or services yield the total dollars profit to your company? And again, if we look back here, it's this column. Who's giving you the highest number? In this case, on this example, product one, right, is generating the highest total gross profit dollars. And then lastly, what is this information telling you? Now that you've reviewed all your products and services for both volume and gross profit, what can you extract from that? And write it down. And then the last section here is what really does generate profit. So summarize your takeaways from this analysis. Which products would you like to devote elevated focus as what generates profit for your company? So this is where customer demand and financial return are intersecting. So that's, again, when we look at the examples from above, I'm going to switch back. Go here. So we look here, this is where you're looking at your data. You see your highest number of customers, highest unit volume, highest profit per unit, highest total gross profit. And then you say, okay, well, what's generating profit? Well, clearly this product is the clear driver of volume. This one is the clear driver of profit. And then, well, but I'm not selling enough ImmunoBoost, even though it has high margin. So I would like to sell more of that, right? So then what generates profit is doubling down on pain relief, XR, while growing ImmunoBoost. So you're going to want to take the information and make some decisions about what generates profit, right? So here we are, what generates profit for the SaaS company, right? So decide for yourself, what are those statements you can make about what generates profit? Which 1 to 3 products would you like to devote elevated focus as what generates profit for your company? You might also make some observations about, gee, we are selling a lot of something and it's not as profitable as we'd like. What could we do to make that more profitable? How could we maybe, create a strategy around that? Okay, so now you have what you need to go back to the 4-page plan and update your data. So you can put what generates profit up in your 4-page plan. You can insert the solutions data from part 1, and you can insert a star next to the solution that drives customer value and profitability, or if there's more than one, you can do up to 3. Okay, so really take a moment now. You've just looked at a lot of data. You've thought about profit and its driver as a force for good. You've thought about it as a measure of customer value. So really acknowledge the wisdom that you have received for yourself. Maybe you've seen some things you like, seen some things you don't like. Acknowledge yourself for all of that. You've clarified which offerings drive your business. You've identified where to double down. You've spotted low margin distractions. You found opportunities to optimize, and you've chose a focused path for growth. So take a moment to acknowledge and really gather in all that you have gathered and learned. And just remember that profit is not selfish. It's sustainable. We want to generate sustainable profits so that we can create more and more value for customers. Next, update your plan. This is the wrong page, but update your plan. After that, we're going to talk about high leverage habits. So what are the high leverage habits? All right, repeat habits that generate breakthrough results. What weekly or monthly habit would keep you aligned with what generates profit? So certainly you want to make sure you are looking at your income statement every month. And it would be great if your income statement has your products, has it, you can see total revenue, and then you can see revenue per product, and you have total gross COGS, and you can see total, you can see individual product COGS, and then you can then see your gross profit and see gross profit per product or service. If you can do that, then every month you can look at those numbers and actually see what your profitability is and what's driving profit every single month into your company. So I would say every month you could review top 3 gross profit drivers. You could meet with finance to address pricing quarterly. You could track gross margin percent on a weekly team meeting. So imagine how you might do that. So gross margin, seeing how you could improve gross margin every week. You could share profit insights at monthly all hands meetings. You can eliminate one low profit offer per quarter. So this is all very powerful stuff that you could do that would be a powerful habit for creating more profit. Profit is where purpose and performance meet. Remember that. It is another example of your greatness when you can extract purpose and performance together into the form of profit. Last here is to identify a high potency action. So one powerful action that you could take to really improve your profitability, to see where you're profitable. Certainly a high potency action would be to make sure you have the data available. Meet with your accountant, meet with your bookkeeper, set up your chart of accounts in such a way that you can see this data on a monthly basis at least, so that you can really drill down to the profitability of each product and service you have. That's a big action if it's not already set up that way. It will help you dramatically as your company scales, and this will be data that you'll want to look at as your company scales. It'll help you make very powerful decisions. It'll also help you see when things are going awry, when something happens and your price goes up. You'll see it and you'll know what to do. You'll be able to make decisions. So cut one underperforming service. That could be something. Make a decision to let something go that's wasting your energy, that customers aren't buying. Invest more in marketing in your top performer or in your most profitable performer that's not getting the attention because it's not actually selling as much. Or see what you can do with that one product that you would like to get out there. You're getting good results, you're just not selling as much. You might need to reprice high cost offerings, right? You might have to do that and make the price go up, see where that sensitivity would be. You might need to present findings to your team and align priorities. So think together about the data that you've just gathered and figure out how can we create more value for the customer and ensure our own profitability. So you can't scale everything. Know what to scale first. And this is really a question of profitability. Where is the fuel aligned? Where is the growth aligned with customer value and with your own financial performance? All right. So today we did a lot. Okay. We talked about profit. We defined the core growth element of what generates profit. You learned how to use the what generates profit clarifier, which you can now use with your team anytime you want. You integrated this within the 4-page growth plan, and you identified a high leverage habit and committed to a high potency action. Good stuff. So powerful growth begins with precise intention, right? So this growth gives you this information gives you precise intention. Now you know where you can go, be intentional, and be of service all at once. And again, I encourage you to continue to be part of the Force for Good system. If you don't have the book, get your copy. The What Generates Profit conversation is part of chapter 6. And when you buy the book, A Force for Good, you get the full Force for Good toolkit, which one of the tools today that we just reviewed was the What Generates Profit Clarifier. You'll get through that instructions for each tool and access to the full Force for Good system. You can also be a part of the Force for Good tool of the week. So that's something we put out every week. We launch a free tool and masterclass. It's available for free for a week. And by signing up at aforceforgood.biz/weekly-tool, you will have access to those tools every week. They'll come to you in your inbox. And lastly, I invite you to become a member of the Growth Accelerator. It is the most comprehensive and accelerated way for you to install the system and see results. It will help you one module at a time. There's 12 modules, implement the system, and not just define each of the core growth elements, which is what we do in these master classes. It also helps you get the flywheel spinning. So you'll receive videos, tools, assessments. You can do it alone or with your team. And the pricing is very affordable, starting at $599. And you can decide if you want to self-implement or if you would like to do it with support. You can learn all about it at aforceforgood.biz/accelerator. And lastly, I thank you for being here with me today and having this important conversation about profit. Remember that the world is made better by women-led business. Let's go make the world a better place. Thank you.